Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is October the 3rd, 2012. Quick little announcement before we get into the actual market analysis. I created a video titled Stock Trading, the Order of Operations. I did that last night. It's on the website, the PerfectStockAlert.com homepage there. It's actually, I recommend this video to everybody. I don't care what you think you know about stock trading. Watch this video to make sure you know this before you trade another stock. This is very important. That's why it's on the homepage, and I'll leave it up there for you guys. Check out. Okay, we're going to start off the day looking at Australia's market, the AORD. This one we can see actually we advanced to stop. We started with the stop down here and a very bullish cup with handle chart pattern, and then we advanced it yesterday to this point here, and now today we advanced it a little bit further. I'm just locking in again. Always whenever I'm looking at these trades like this, my first target is going to be the previous high. So in this trade here, you had the previous high here. So when we went long here, the target was of course a test of this high. We got that. We advanced to stop, locking that gain. If she keeps going higher, fine, we'll advance to stop. If she starts to pull back, we are stopped out, and we look for another entry opportunity. She is in a bullish uptrend, so of course we keep looking to trade with that trend. Here we went long again, we made money, and we're locking in gains, and that's what you always want to do. The Dow Jones Industrial Average continues to basically just do this little kicking dance, moving sideways here. See a little bit more strength than we have seen in the past, like last week, but again, we're just moving sideways here. And I'm going to show you a couple other charts that are showing that we could have a potential for another move to the downside here. Not a big one, but there could be in that move, and that's something that would actually be an opportunity on the long side. But again, you'd want to get stopped out just to make sure that your next bottom is where you expect it to be, and so forth and so on. Don't just hold expecting, well, it's alright, it's not very far away. Okay, so right now I'm still long, still holding position, is still respecting all my stop loss limit and all this other stuff, and it's still in the uptrend, so I have no reason not to. But some of the other charts I'm showing you are going to start to show another picture. The NASDAQ chart also same overall story here with the move to the upside, and you're getting a little more strength here with the hammer candlestick formation here and here. That's actually stronger than what we're seeing on the Dow Jones Industrial Average. However, when we're looking at this chart here, and it's a long shot, but of the longer term pictures between the NASDAQ, the S&P, and the Dow Jones Industrial Average, the NASDAQ is actually a bit more overextended than the others. So to see a topping pattern there, preparing for a bigger pullback wouldn't be without question. So this is something I want to bring to your attention. And again, you're only looking at this right now as saying this is something that could form. It's not something that's going to form. Of course, I'm not saying that. I'm just saying look at the pattern. Here you've got this move right here. We'll call that the first shoulder. We'll call this the head. Notice the lower low than the previous point here. We'll call this the second shoulder. If you were to actually turn around and start to break down and start to move lower, and actually we'd have to take this low point here, this low point here, and draw a trend line like this, and say, okay, that would be the neckline. If we were close below the neckline, it would actually be an indication of a move lower is going to happen, which we'd simply take the distance to the high point here, the head, down to the neckline, and do the math and say, okay, this distance from the breakout would tell us where we're going to fall to. So we're basically looking at finding the previous resistance point there as being a support line. That's why, again, I want to respect my stop. If we get stopped out, let it happen. We'll look for another entry opportunity at a later point in time. But right now, this is just something that could happen if the markets don't start to take off and gather some steam to the upside. If we start to snap this trade, then the bears may have a bigger argument than I've been thus far giving them credit for. Oil has broken our little trade we had the upside. That's why I'm actually talking about this situation that may develop on the NASDAQ and a couple other charts, is because what we're seeing here is a little weak move to the upside, even getting a breakout of the downtrend that we had here, which would be confirmation, but then she just turns around and snaps it. So we're really not seeing a lot of strength in our markets, and so that's something that's, if it's for a couple of days, I don't mind that. But if it goes on for a prolonged period of time, there's only so much time that can go on before the markets and bullish investors say, wait a minute, something's not quite copacetic here, I'm stepping out. Now in this particular case here, I'm not seeing weakness, even though we are breaking this trend. I'm going to look for another entry opportunity, and the reason for that is quite simple. If you actually look at the close on the low point here, you can see the close here, and then compare the close here and draw a trend line between the closes, because the ultimate oscillator is based on the closes. So you can see that you're trending to the downside here. However, the corresponding time period on the close here, on the ultimate oscillator low point, and then the low close here, you can see we are trending up. that means what's going on here in oil is you're selling off, but you're overselling. You're getting into a situation that's going to be creating a bullish divergence, basically saying that the selling that's going on now is unsustainable selling. We'll snap back in the other direction, but we want to time that, so keep watching for another entry opportunity on the oil chart here. In this Fed manipulated market, the UUP, or the US bullish dollar the index actually kind of trades the opposite of the overall averages. When you're seeing peaks in the averages, you should be seeing bottoms in the UUP chart, and vice versa. So whenever I'm looking at the markets and saying, okay, there's possibility here of a head and shoulders pattern forming on the NASDAQ, I still see it as a real long shot. The reason for that being that the UUP is not in any way, shape, or form looking bullish to me. Yes, we have moved higher here. We did have a double bottom at 2178 level here and here, so we didn't take out the low, and we are moving higher. But look at the ultimate oscillator, 67. I really have a hard time believing this is just the start of a big move by the dollar here, which would tell me that if it's not a big move by the dollar is going to end up breaking down, and then of course the U.S. markets are then moving higher. So yeah, that's just my particular take on it at this point in time. But obviously, if I'm taking the time to double check my work, it's because there's something's bothering the charts. There's something that's not playing out the way I expected, and that's that we're taking so long to actually get moving off of this little support that we're on the major market averages, and then of course the UUP is not breaking down as fast as I'd like to see it either. So keep an eye on it. This could break either way, but I'm still betting in favor of the U.S. markets breaking to the upside and the dollar breaking to the downside. The Russell 2000 Small Cap Index, same basic overall story. We've had a really weak little pattern to the upside for about 4 days, and now we're kind of starting to roll over here. We're seeing a series of lower lows here, and so you could see another move down here breaking out, actually stopping us out, and then testing this 50-day moving average, where I think you just find support anyway, because again, 50-day moving average is where you're going to find support in an uptrend, and you've got this previous resistance line, which is going to be providing support as well. There's a lot of strength right there, and also you're going to be pulling that down to the ultimate oscillator by the 30 line there, so that's another indication there that I'd be like, hey, this is probably reaching the bottom. So again, I'm having a hard time seeing the really big bearish argument, but I'm going to let you guys decide for yourselves. The S&P 500, the SPX, this one is showing more strength than the other charts. And again, we're already long here, and it does reflect more of the actual market averages than something like the Dow Jones Industrial Average. But again, I would stay with this for this particular point in time. We're seeing more strength here than we have been seeing, and I don't have a problem with it. The Toronto Stock Exchange, I left this one alone even though we've had a breakout of the channel. I didn't actually try to buy it. I didn't buy it because the breakout of the channel was, first, the channel was kind of wide, and the second, the candlestick formation that broke out was not all that strong looking. You got basically a bunch of sell pressure right there. And now we started to roll over a bit. We could hold and just hug this middle Bollinger Band line for a little while, or we could actually do what I'm talking about. You're starting to see also happen on some other charts, just that breakdown when you actually move lower here and double dip. That's fine. If that happens, I'd look for a buy opportunity again at the bottom for multiple reasons. You're going to have the previous resistance acting as support. You're also going to have support provided by the 50-day moving average, and the 200-day moving average is also just crossed. It's very bullish, and you also have the ultimate oscillator trading back down around the 30 line. In a lot of these cases, what you're going to be seeing, if that happens, are situations that basically just we're looking for bullish divergence situations. You're going to have a close here, a low close would actually be here, and then if you did get that rollover, your lower close would be lower than that, so you'd be trending down here and probably up here, giving you a bullish divergence, telling you it's oversold, buy it, it's going to bounce back in the other direction. So that's just something to keep an eye on. This is what we're facing. If we don't get liftoff by this market in the next couple of days, we're going to roll over here and stop out of a lot of trades and then be looking for re-entry opportunities. Wilshire 4500 EMW, basically confirming the breakout, so forth and so on, a stronger chart formation here. We've, like I said, closed above this downtrend line, confirming that move there. That would be another buy opportunity with the stop set off of this low point here. You've had 3 days to the upside. We haven't had really any big move, so I don't want to advance to stop. Typically what I'll do is whenever I get involved in the position, I won't advance to stop. For example, let's say that we get a breakout here. I give it some wiggle room. I keep the stop here. The next day you may get a little bit of wiggle. Once we've taken off substantially, then I'll take the stop loss limit and advance it and then we'll start to let it wiggle a little bit. Once we take off again, I'll take the stop and advance it again. Just keep doing that until we finally get stopped out. In this case here, I'm just going to let it breathe and just give it a little bit more time. If we get a nice move to the upside or something like this, then take the stop loss limit here, start advancing it to low point, eliminating risk, locking in gain, and start doing that. Again, if you've not been to the free website at perfectstockalert.com, I recommend you do so. At least check out the home page so you can watch that stock trading video that I talked about earlier in this video. God bless, take care, and I will see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.